Hey everybody, how's it going? First off, I want to say thank you to everybody who watched my first video and has subscribed to the channel. Really appreciate the support, the likes, and the comments. And if you're new or have anything to say, be sure to say it down below. I'm happy to chat with you. Today we're going to go into retiring on YMAX. Obviously, I'm not the type of investor that puts everything into one stock, but I think diversification of growth and high yield can get you in a place where you can have your nest egg growing over time, but you can also reap the benefits of some of these Yieldmax, Defiance, other funds that are paying off high dividends. So currently my goal for YMAX by the end of the year is probably to get up to about 2,000 shares. And I'm going to go into how I make an optimization on what I could make off of this over time based off of what I've seen so far. And an optimistic, I'm going to say, because prior results don't guarantee anything in the stock market, optimistic outlook that I have for Yieldmax, YMAX, which is the fund of funds. I'm going to look at just year to date because YMAX started in January. So I've seen a lot of people look a year back, and then they're comparing the year, the last year, the last 3 years to YMAX, which is not accurate because if you look at year to date, it's almost, or even from inception, it is really, really accurate compared to, well, why don't we just pull it up from inception? So we'll just do 117. There you go. So from inception, it's only about a 0.5% behind SPY. Now I like to benchmark pretty much everything against the S&P 500. This is over a half a year. To me, when I see this compared to some of the other YMAX funds, I'm like, sign me up 40%. And you'll see where I bake that into my calculations here as we go. So total return 16.72 compared to the 17 with dividends on top. That's with the dividends reinvested, but you're keeping up with the S&P 500 where we'll get into that here. So I like to use this market beat calculator. I have everything put in here from the current price using 2,000 shares and a 25% dividend yield. Now, the way this calculator works is it's asking you for a dividend increase and then a share appreciation. It won't take a negative number here. So what I'm doing is right now the estimated yield is 44%. So I'm actually taking a 19% away from the yield, which would over a year period would say, all right, your share price can actually lose 19% of its value. That's kind of my thought on adjusting this, or even your dividends could fall. And then this is what it gets. You get an average annual return of 23%. So even if right now we've been pretty, price has gone, total return has gone up over time. And even if you look at it from flat, so let's just go to performance. Is that what it is? Price return there. So even from a price return, you can see YMAX is pretty much flat. The S&P is up 17%. YMAX is flat. That is good. I know dividends are being reinvested, get the positive number, but if YMAX can at least stay flat, then you're going to capture a majority of that 44% yield. So that's why I put it at 25%, saying, well, you're going to have down years and there's no guarantee that they're going to stay flat. You can see there's been some downturns and I expect there to be some, but reinvesting those dividends will help with that. But looking at it from a chart perspective, you can see up and to the right, which is good. And we'll go over the years. So starting with 2,000 shares, you get an annual dividend of $4.98, which is about $9,000. So your first year alone, 9,000, you're going to grow. It's going to go back into your portfolio and it's going to, your balance is going to be 50,000 in that stock. And we're going to do that, in my mind, for at least 5 years. So you get to 5 years, you're 23,000, you have 100K. You're now making 23,000. All right, let's carry that on for 10 years, say 68,000 in dividends. I think a majority of average people in the United States, this is a comfortable amount. My opinion, I know some people, it depends on if you're in cities or great areas, but on average, this definitely 1 year later, 84,000 is enough, like, you pretty comfortable for your overall finances. But and you can just see it starts really snowballing from there. 104, 129, 160. This is dividends, and you can see your balance going up here too. Now, one could argue, oh, I should go all in and put $100,000 in right from the start, or 200,000, or whatever it may be. But I think if you have to have a lot of money to be able to do that, the normal person doesn't have that, and also that requires a lot of risk. These YMAX funds are very, very risky. You don't get 40% yield without taking risk. I don't think enough people say that. These are high risk funds. They don't have a lot of to them, and I know some of these portfolio managers have been around for a while, but they also have to, that they're here to stay and that they're going to manage these funds correctly time. So this is basically, they've only been around for a little over a year, so they haven't done that in my opinion yet. Not saying anything bad about them, but I want to verify. I don't want to trust stuff. But going into this is promising. That's not even this is a 20-year time period. So I'm younger or older. This is just one stock with about 40,000, putting in about $40,000 into it. And if you can be disciplined and reinvest and until you need it, it's gonna pay off no matter how many years you can put that in my opinion. And YMAX I really like, and think that if the current trajectory and it stays balanced like this will be a really promising vehicle in my opinion that I am interested in, and I think I will continue to grow. We'll see how many shares I actually add to my portfolio of this. Like I said, this is pretty significant. 3% won't go too far over that. I don't want to have like the heaviest I have, and I know it carries other YMAX in there. My rule for those are usually you don't want to be more than 1% in any of these funds. That's already very heavily weighted for me, and the only reason it's that heavily weighted at the moment is because I have capital to deploy, and when I do deploy it, it'll be into EVTI, these more tested, safer funds. But right now, market's still rallying all-time high. Maybe I get left behind, but Treasury bills are paying 5%, so for that amount of that's very low risk compared to everything else. I know I'm not getting the growth that SCHD has gotten, or stuff. So was it the best move? Probably not, because these markets printed much more of the past few years than 5%. But honestly, with the stuff going on, I've been kind of shaky in the market overall, and of a pullback and stuff like that. I know that means nothing. We could just keep rallying to new all-time highs, and I might have to deploy at higher levels. But that's kind of the risk you take when you work so hard to make money over time. And I did sell and make trades throughout the last couple years to get a lot of this money. You tend to be more conservative, my opinion, however, because this is a lot of money for me personally, and this is my retirement for the next however many years. So I try to make the best decisions that I can make for myself, and that's kind of why I wanted to share my journey with YouTube and get feedback of what other people are doing. And I know I'll get trolled for like cash on the side and stuff like that, but this is a YMAX video, and I do want to keep growing this. So if you guys enjoyed this content, let me know in the comments, and we'll see you in the next video.